Hello, guys. It's Anthony again. It is Trading with the Family. We want to help you grow your income long term. We want to give you solutions and ideas that will help keep you profitable and keep your money in your pocket, keep your money growing year over year, month over month. Week over week, we want to keep it growing in every way that we can. But listen, if this is your first time here, go ahead and like and subscribe. Check us out. Just getting started, but we want this next 6 months to be the best 6 months that you've ever had in the market. In the last video, I talked about NVIDIA, but today I actually want to go back to the basics. And if you're just getting started, we want to start out with our baby steps first. If you're a new trader and you're new to the market, if you're watching me from any of the places that I've lived, Mississippi, California, North Carolina, Korea, Alaska, anybody in the military that's out there that's watching, or anybody, period, your children, my nieces and family members all over the United States. Listen, if you're just getting started, let's say you got $1,000, $500, whatever you have, we want to get you started with the ETF. It's called VTI. And this is not financial advice. This is not me saying go buy this. This is not me saying you've got to get this. But I just like to show you what can happen if you get invested in an ETF and you continue to buy year over year up until you retire, and maybe even after you retire. This is showing VTI at a market price of about $267. The market has actually pulled back a little bit, so VTI might be down just a tad. I got in VTI originally, I think around just a little bit under 200, and then I got my kids in that, I think around 205. So imagine if you got in around 205, and I want to show you, let me see if I can find a chart. So here's the chart. So the 3-year chart. So I think we've been in VTI about 3 years, maybe a little bit longer, because I don't see the downside that we experience. But anyway, from 222, you can see the bumpiness, and you can see the ride all the way up to the 260s. And so this is an ETF. And what makes this a really good investment is they offer you a dividend. Not only do they offer you a dividend, but their performance, let's look back at their performance. The 3-month, 3.4%, year to date, 10%, 1 year, it yield 27%, 5 years, 14%. So this is a good place when you look at this chart. When you look at this chart, this lets you know that, listen, last year was the year to be investing. If you had some money, you could have made 27, almost 28% on your money just being in VTI. Over the last few years, it's been down because of the economy and the market pulling back just a bit. But still, if you were in for 5 years and you made 15%, you can't be mad at that. And so you want to be in the market, you want to be diversified, but you also want to go somewhere where your money can give you a return. And this is a great place to be if you don't want to be trying to pick individual tickers. Let me show you the holdings on it. Here we go. Portfolio distributions. Here we go. Let me scroll back up. So if you got $10,000, you invest in VTI. They show their dividends. They've paid out dividends. We've never missed dividends. They pay the dividends, I mean, right on time. We've never missed a dividend. But I want to show you, instead of just trying to go out and buy Apple and buy all of these different companies, you can just get VTI. And where is it? So here we go. This is the sectors that it covers. Basic materials, consumer discretionary, consumer staples, energy, financials, healthcare, and they show you the technology. So it's basically technology heavy, 33%, basically right at 34%, real estate 2.6, industrial 12, healthcare 11, So you want to be aware of that when you're buying a ETF. You know, what is it invested in? And here we go right here. The top holdings are Microsoft, Apple, Nvidia, Amazon, Facebook, Alphabet, Berkshire Hathaway. You might not be able to buy Berkshire Hathaway outright. Eli Lilly, Broadcom, all of these different companies. And look, y'all, there's 3,663 stocks in this one ETF. So you basically own the entire market by simply buying this one ETF. So this is the smart way to shop. This is the smart way to say, I want to be in real estate. I want to be in industrials. I want to be in healthcare. I want to be in all of these different sectors, but I want to do it the smart way. And listen, if you build your foundation, say you take the rest of this year and you say, man, every time I get paid, you know, once a week, boom, I'm buying VTI, 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 and you have a goal of $10,000 to $20,000 as a base of your portfolio into VTI. This is how they did this here. They didn't just go out overnight and buy 75,955,063 shares of Nvidia, market value $82 billion. I mean, they didn't just go out and do that overnight. Um, it took time. It took time, and so we want to also do the same thing that they're doing, but just make it more acceptable, more reachable by starting small. By starting small. Okay, so this is what we're talking about today, VTI. There's also VOO, and it mimics. I want to show you in the chart. Let me see if I can switch my screen, and I want to show you the SPY, the S&P 500, and I want to show you how VTI basically it mimics the SPY, which is the S&P 500, and then also it mimics VOO. They look totally the same. Let me see if I can show you these real quick and we are done. So this is the S&P 500, and you can see here the upside all the way up to here about 550, and then we gap down. We got the big wick there from 547, and then boom, we end up today down here 541, somewhere in that area. After hours, let me take a peek, 542.97. So we're wicking down, but let me show you. This is the SPY. Now let's look at VOO, because this is the whole market. Look at the chart, same chart, VOO. I couldn't get the VTI chart to pull up, but it's basically the same chart because it's all of the same holdings. It's the Vanguard S&P 500. So it's literally the same thing, same stocks, but it's just through Vanguard. And then with VTI, basically VTI versus Vanguard. Vanguard is going to mimic the S&P 500, which is the top 500 companies in the United States. And then VTI is going to give you the best of the entire market. So even if the market crashes, your ETF is not going to fall as hard and go down as one ticker would, because you got the entire market enclosed in one package. It's like you got all of Walmart in one package. Everything that's in Walmart is yours. That's the best way to explain it. The ETF is an entire basket of stocks. So it will not fall even in a crash. It will not fall as drastic as a single ticker would. All right, guys. Well, that's it for today. That's VTI. Like and subscribe. Share this channel. If you're just getting started, listen, you can go out and buy Apple. You can go out and get all those individual tickers, or you can just get VOO, or you can get VTI, and you are set. Listen, my name is Anthony. This has been another edition of Trading with the Family. Love you guys. Looking forward to seeing you here soon. We're going to go live. I'm going to have some guests on. I'm going to be inviting Chrissy on. Hopefully, I'll be able to get my cousin Kenosha to come on and do an overview of some long-term trading. Also, there's a guy here in Orlando, Josh. He does dividend plays. I want to bring him on. So stay tuned. There's some great things coming. The second half of the year is going to be the best part of the year. Take care and God bless you.